Based on the historical data and forecast, Bitcoin shows a mixed trend with periods of both upward and downward movement. The RSI consistently remains below the 50 mark, indicating that the asset is generally oversold. The Bollinger Bands have been widening, suggesting increased volatility. Considering the current RSI level of 36.6 and the forecast for the next week, I recommend a long position strategy. We will enter a long position at $107,100, placing a stop-loss order at $108,400, which is the support level. The initial target price will be $109,700, aligning with the forecast for November 1, 2025. To refine the strategy, we will incorporate the Bollinger Bands. If the price breaks above the upper band, we will adjust the target price to $111,600. Conversely, if the price touches the lower band, we will tighten the stop-loss to $107,500 to protect against further losses. This dynamic approach allows us to capitalize on the expected upward momentum while mitigating risk. The portfolio will primarily focus on the long strategy, adjusting the stop-loss and target price based on Bollinger Band signals. Based on the historical data and forecast, Ethereum has shown volatility with fluctuations between support and resistance levels. The RSI readings indicate periods of oversold and overbought conditions, while the Bollinger Bands suggest potential price breakouts. Considering the recent price action, the forecast for the next week suggests a downward trend, with prices potentially reaching $3,720. Therefore, I recommend a short position strategy. The entry price will be $3,810, coinciding with the first day of the forecast. A stop-loss will be set at $3,880 to limit potential losses if the price reverses. The initial target price will be $3,770, aligning with the forecast's downward trajectory. To refine the strategy, we'll incorporate RSI and Bollinger Bands. If the RSI drops below 20, indicating an oversold condition, we will hold the short position, anticipating a rebound. Conversely, if the price touches the lower band of the Bollinger Bands, we will consider covering the short position, as it suggests a potential bounce. The final target price will be $3,720, based on the forecast. This combined approach balances risk and reward, leveraging both technical indicators and price forecasts for optimal returns. Based on the historical data and forecast, XRP shows a fluctuating trend with a recent bounce from the support price of $2.44. The RSI has been oscillating between 34.5 and 52.6, indicating periods of oversold and overbought conditions. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential for a rebound. Considering these factors, I propose a long position strategy. We will enter a long position at $2.33, coinciding with the forecast price on November 7, 2025. A stop-loss order will be placed at $2.3, just below the lower Bollinger Band, to limit potential losses. The initial target price will be $2.5, aligning with the recent resistance level and a conservative profit target. To refine the strategy, we will incorporate RSI signals. If the RSI rises above 60, indicating an overbought condition, we will consider taking partial profits and adjusting the stop-loss to protect gains. Conversely, if the RSI falls below 30, suggesting an oversold condition, we might consider adding to our position. The final portfolio will be a blend of the Bollinger Band strategy and the RSI strategy. The Bollinger Bands will be our primary indicator for entry and stop-loss, while the RSI will be used for profit-taking and position adjustments. This combined approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, BNB shows a mixed trend with periods of consolidation and slight downward pressure. The support level at $1,070 has held strong, and the resistance at $1,130 has been tested multiple times. The RSI fluctuates around the 50 mark, indicating neither strong overbought nor oversold conditions. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the upper or lower bands. Considering these factors, I recommend a moderately bullish strategy with a focus on short-term gains. My proposed strategy involves entering a long position at $1,080, coinciding with the recent forecast price and a bounce from the support level. A stop loss should be placed just below the support at $1,070 to protect against potential downside breaks. The initial target price is set at $1,110, aligning with the forecast and a test of the immediate resistance. If the price reaches $1,110, consider moving the stop loss to break even to secure profits and potentially extend the target to $1,130, aiming for the resistance level. This strategy combines support and resistance levels with forecast data and RSI to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana shows a downtrend with recent price fluctuations. The RSI consistently hovers around the 40s, indicating a slightly oversold condition, but not strongly so. The Bollinger Bands are narrowing, suggesting a period of consolidation before a potential breakout. Considering the forecast for the next week predicts a further decline to $174, I recommend a short position strategy. We will enter a short position at $183, placing a stop-loss order at $186 to protect against a sudden reversal. The initial target price will be $176, aligning with the forecast. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the upper band, we'll consider closing the position early to secure profits. The RSI provides another layer of confirmation. If the RSI falls below 20, signaling a strong oversold condition, we'll tighten the stop-loss to $184, the support level. Conversely, if the RSI rises above 80, indicating an overbought condition, we'll consider exiting the short position. This combined strategy, blending technical indicators and forecast data, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Dogecoin shows a downtrend. The RSI consistently hovers around 40, indicating neither strong overbought nor oversold conditions. However, the forecast data suggests a continued decline, with prices dropping to $0.168. The support price remains at $0.182, while the resistance is at $0.231. Considering the Bollinger Bands, the price is currently near the lower band, suggesting potential for further decline. Therefore, I recommend a short position strategy. Enter a short position at $0.186, placing a stop loss at $0.196, just above the recent high and the center of the Bollinger Bands. Set a target price of $0.168, aligning with the forecast data and providing a reasonable profit margin. To refine this strategy, we can incorporate RSI signals. When the RSI dips below 30, it signals an oversold condition, which could be a potential entry point for a long position. Conversely, when the RSI exceeds 70, it indicates an overbought condition, suggesting a possible entry for a short position. Given the current RSI around 40 and the forecast for further decline, I prioritize the short position. However, if the price rebounds and the RSI reaches 70, consider a short entry at $0.202, with a stop loss at $0.211 and a target of $0.181. This combined approach, prioritizing short positions with RSI confirmation, should provide a high return investment strategy for Dogecoin. Based on the historical data and forecast, TRON shows a downtrend with periods of consolidation. The RSI consistently dips below 50, often entering oversold territory below 30, indicating potential buying opportunities. The Bollinger Bands have been contracting, suggesting a period of low volatility followed by a potential breakout. The support price is consistently at $0.292, while the resistance is at $0.309. The forecast suggests a slight upward movement in the coming week, but it's crucial to be cautious. My recommended strategy is a combination of RSI and Bollinger Bands, with a focus on a long position when TRON approaches the bottom of the Bollinger Bands and the RSI is below 30. Therefore, I recommend entering a long position at $0.296 when the RSI is at 29.9 and the price touches the bottom of the Bollinger Bands at $0.289. Place a stop-loss order at $0.28 to limit potential losses. The initial target price is $0.303, aligning with the forecast and the middle of the Bollinger Bands. If the price breaks through the resistance level of $0.309, consider moving the target price to $0.313. This combined strategy leverages both momentum and volatility indicators to maximize potential returns while managing risk. Based on the historical data and forecast, Cardano demonstrates a downtrend. The RSI consistently fluctuates below 50, indicating a prevailing bearish sentiment. The forecast data for the next week projects a continued decline, with prices potentially reaching as low as $0.545. Considering these factors, I recommend a short position strategy. The entry price will be $0.597, coinciding with the first day of the forecast. A stop loss should be placed at $0.601, just above the support level, to limit potential losses if the price unexpectedly reverses. The initial target price is $0.559, aligning with the forecast for November 7, 2025. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading near the lower band supports the downtrend. If the price touches the lower band of $0.545, it suggests a strong buying opportunity for a quick profit. Therefore, I will adjust the target price to $0.545. The strategy combines RSI and Bollinger Bands to confirm the downtrend and maximize profit potential. The final portfolio will be a short position with an entry price of $0.597, a stop loss at $0.601, and a target price of $0.545. Based on the historical data and forecast, Wrapped Beacon ETH has shown considerable volatility, with a recent downtrend and a forecast indicating further decline. The RSI consistently remains below 50, often dipping into oversold territory, suggesting a potential for a rebound. The Bollinger Bands indicate periods of high volatility, with the price frequently touching the upper and lower bands. Considering these factors, I propose a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. Initially, we will implement a contrarian strategy, aiming to capitalize on the oversold conditions. The strategy will involve a staged entry. We will enter a long position at $4,030 when the RSI hits an oversold level of below 20. The stop loss will be set at $4,000 to protect against further downside risk. The first target price will be $4,150, aligning with the recent resistance levels. If the price reaches $4,150, we will move the stop loss to the entry price of $4,030. The second target price will be $4,260, near the center of the Bollinger Bands. If the price reaches $4,260, we will take partial profits and adjust the stop loss to the previous target price. This tiered approach allows us to maximize potential gains while minimizing risk, capitalizing on the anticipated rebound while safeguarding against unexpected market shifts. Based on the historical data and forecast, Chainlink shows a downtrend. The forecast for the next week indicates a continuous decline, with prices falling from $16.7 to $15.7. The support price has remained steady at $16.8, while the resistance price is $18.5. Considering the RSI values, which fluctuate between 35.1 and 46.8, the asset is generally not oversold or overbought. However, the Bollinger Bands suggest potential trading opportunities. The price is currently near the lower band, indicating a possible short-term bounce. Therefore, my recommended strategy is a contrarian play targeting a short-term rebound. I suggest entering a long position at $16.7, placing a stop loss at $15.7 to protect against further downside. The initial target price should be $17.2, aiming to capture a quick profit from a potential bounce off the support level. If the price breaks through the resistance at $18.5, consider adjusting the target price to $18.5. This strategy combines trend analysis with Bollinger Bands and RSI to maximize potential returns while managing risk effectively. Based on the historical data and forecast, official Trump shows a strong upward trend, particularly evident in the latter half of October 2025. The price surged from $8.3 to $8.02, indicating robust buying pressure. The RSI consistently moved above 50, suggesting positive momentum. Considering the forecast for the next week, with prices ranging from $7.16 to $7.95, I recommend a long position. The support price of $7.65 provides a solid base, while the resistance at $8.3 offers a potential target. We'll implement an RSI-based strategy with an entry price of $7.16, a stop loss at $7.65, and an initial target price of $8.3. This strategy capitalizes on the anticipated upward movement while mitigating risk with a clear stop-loss level. To refine the strategy, we'll incorporate Bollinger Bands analysis. The price consistently traded above the middle band, confirming the bullish trend. Given the forecast, if the price touches the lower Bollinger Band, which is around $4.75, it would signal an oversold condition, triggering a buy. Conversely, if the price reaches the upper band, around $8.02, it indicates an overbought situation, suggesting a potential pullback. Therefore, our final portfolio combines the RSI and Bollinger Band strategies. The entry price remains $7.16, the stop loss is set at $7.65, and the first target is $8.3. If the price hits $8.3, we'll move the stop loss to the middle Bollinger Band, currently around $6.42, to secure profits and ride the trend further. Based on the historical data and forecast, Ether.fi shows a downtrend with decreasing momentum. The RSI consistently hovers below 50, indicating a bearish sentiment. The forecast data predicts a further decline, with prices dropping to $0.842. The support price is $0.961 and the resistance is $1.04. Considering these factors, a short selling strategy is recommended. We will enter a short position at $0.922. The stop loss will be set at $1.04, just above the resistance level to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.842, aligning with the forecast data. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been consistently trading near the lower band, suggesting potential for further downside movement. If the price retraces and touches the upper band, which is currently at $2.03, we will close the short position and re-evaluate the market conditions. If the price reaches the target of $0.842, we will take profits. However, if the RSI reaches an oversold level of 20, we will consider covering the position and waiting for a better entry point. This layered approach, combining technical indicators and forecast data, aims to maximize returns while minimizing risks. Based on the historical data and forecast, Bonk shows a slightly decreasing trend with recent fluctuations. The RSI consistently hovers between 35 and 45, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. The forecast for the next week predicts a continued downward trend, with prices falling to $0.0000118. Considering these factors, I recommend a short position strategy. The entry price for this short position should be $0.0000143. Given the support level at $0.0000138, set a stop-loss price at $0.0000146 to limit potential losses. The forecast predicts a further decline, targeting $0.0000118 as the profit target. This strategy combines the downward trend, RSI readings, and Bollinger Bands contraction for a high-probability short trade. This portfolio is the most efficient because it takes into account all three strategies. Based on the historical data and forecast, Aave demonstrates a mixed trend with periods of consolidation and upward movement. The RSI consistently remains below 50, indicating a generally oversold condition, with dips below 40. The Bollinger Bands show that the price has been fluctuating within the bands, with the lower band frequently touched. Considering the support price of $215 and the forecast for the next week showing a downward trend with prices ranging from $215 to $206, I recommend a long position strategy. We will enter a long position when the RSI falls below 35, with an entry price of $215. The stop loss will be set at $208, just below the lowest forecast price. The initial target price will be $228, aligning with the recent resistance levels. To maximize returns and manage risk, I propose a dynamic adjustment of the target price. If the price reaches $228, we will move the stop loss to the entry price of $215, securing a profit. Subsequently, we will set a new target price at $241, aiming for a more substantial gain. If the price fails to reach $228 and shows signs of reversal, we will exit the position at $215, minimizing potential losses. This strategy combines RSI signals, Bollinger Band analysis, and support/resistance levels to create a high-probability, high-reward trading plan. The overall portfolio will be 60% long position and 40% in cash. Based on the historical data and forecast, TRON shows a slight upward trend with periods of consolidation. The RSI consistently hovers below 50, indicating a generally weak buying pressure, but recently climbed above 40. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility which is now expanding, potentially indicating a breakout. Considering the support at $2.11 and the forecast prices fluctuating around $2.13 to $2.18, I recommend a moderately bullish strategy. We will enter a long position when the price breaks above the upper Bollinger Band, specifically when the price reaches $2.34. Our stop loss will be set just below the lower Bollinger Band at $2.07, providing a buffer against short-term price fluctuations. The target price will be set at $2.71, aligning with a significant upward movement based on the recent Bollinger Band expansion. To maximize efficiency, I propose a portfolio combining the three strategies. The primary strategy will be the breakout from the upper Bollinger Band at $2.34, with a stop loss at $2.07 and a target price of $2.71. If the RSI dips below 30, oversold, before the breakout, we'll initiate a small long position at $2.11, with a stop loss at $2.07 and a target price of $2.21. Conversely, if the RSI reaches 60, overbought, and the price approaches the resistance at $3.18, we will consider taking profits at $2.71. This blended approach balances risk and reward, capitalizing on both momentum and potential reversals while respecting the established support and resistance levels. Based on the historical data and forecast, Virtual's protocol shows a strong upward trend, particularly after November 1, 2025. The RSI indicates that the asset is currently not oversold, but it has moved from oversold to overbought territory, suggesting potential for further gains. The Bollinger Bands confirm this trend, with the price consistently moving towards the upper band. Given these factors, I recommend a long position strategy with an entry price of $1.21. To manage risk, set a stop loss at $1.18, just below the lower Bollinger Band. The target price should be $1.35, aligning with the recent resistance level and providing a reasonable profit margin. To refine this strategy, we'll incorporate a dynamic adjustment based on the RSI. If the RSI reaches 75, consider taking partial profits at $1.3. Conversely, if the price approaches the support level of $1.32 and the RSI dips below 30, consider reducing the position size to mitigate potential losses. This adaptive approach combines the momentum from the Bollinger Bands with the RSI's oversold/overbought signals for a more robust investment approach. This strategy aims to capitalize on the current upward trend while incorporating risk management techniques to protect capital. Based on the historical data and forecast, DeXe shows a mixed trend with periods of consolidation and upward movement. The RSI consistently fluctuates around the 40 mark, indicating neither strong overbought nor oversold conditions. However, the forecast for the next week suggests a potential upward trajectory, with prices moving from $6.55 to $6.73 before slightly decreasing to $6.45. Considering the support price of $6.29 and the resistance price of $11.4, there's considerable room for price movement. I propose a strategy combining RSI and Bollinger Band signals. We will enter a long position when the RSI dips below 30, indicating an oversold condition, and the price touches the lower Bollinger Band. The entry price will be $6.3, placing a stop-loss order at $6.2 to mitigate potential losses. The initial target price will be $6.75, aligning with the forecast peak. To optimize returns, we'll implement a dynamic target price strategy. Once the price reaches $6.75, we will move the stop loss to break even to protect profits. If the price continues to rise, we will set subsequent target prices at $7.5 and $8, taking partial profits along the way. Conversely, if the price falls back below $6.5, we will exit the position, securing a small profit or minimizing losses. This approach balances risk and reward, capitalizing on potential upward momentum while safeguarding against unexpected downturns. The combined strategy leverages both RSI and Bollinger Bands to identify optimal entry and exit points, maximizing the probability of high returns. Based on the historical data and forecast, Bittensor shows a generally upward trend with significant volatility. The RSI values fluctuate between 52 and 66, indicating neither extreme oversold nor overbought conditions for most of the period. However, the forecast for the next week predicts a continued upward movement, with prices potentially reaching $472. Considering the support price of $452 and the resistance price of $563, we will implement a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. Our primary strategy will be a long position based on the RSI and Bollinger Bands. We will enter a long position at $434 when the price touches the bottom of the Bollinger Bands. The stop loss will be set at $414, just below the recent support level, to mitigate potential losses. The initial target price will be $463, aligning with the forecast price and the upper Bollinger Band. If the price breaks through the $463 target, we will adjust the target to $472, based on the latest forecast. This strategy aims to capitalize on the predicted upward movement while incorporating risk management techniques. Based on the historical data and forecast, Zcash shows a strong uptrend with consistently rising prices, especially in the last week. The RSI values have generally been above 60, indicating bullish momentum, and have recently crossed above 70, suggesting overbought conditions but also continued upward pressure. The Bollinger Bands have been widening, confirming the volatility and trend strength. Considering the forecast for the next week, with prices predicted to rise from $367 to $442, a long position is warranted. I recommend entering a long position at $367. Given the recent overbought RSI and the potential for a pullback, a stop loss should be placed at $345. The initial target price should be $404, aiming to capture a portion of the forecasted upward movement. To refine this strategy, I propose a dynamic approach. After reaching the initial target price of $404, we can consider moving the stop loss to break even to protect profits. If the price continues to rise, the next target price should be $413, aligning with the forecast. If the price shows signs of reversal or the RSI approaches 80, consider taking partial profits. The ultimate target price should be $442, based on the forecast high. This strategy combines trend following, RSI-based overbought considerations, and Bollinger Band volatility confirmation to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Dash shows a generally upward trend with significant volatility. The support price is consistently around $49.1, while the resistance is $61.7. The RSI fluctuates between 54 and 68, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has recently been approaching the upper band, suggesting potential for a pullback. Therefore, I recommend a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. Specifically, I suggest entering a long position when the RSI drops below 30, near the bottom of the Bollinger Bands. For example, if the RSI falls to 28 and the price is around $48.2, enter a long position at $48.2. Set a stop loss slightly below the bottom of the Bollinger Bands, say at $47.5. The initial target price should be near the resistance level of $50.3, with a secondary target at $52.3 based on the forecast data. This strategy aims to capitalize on short-term pullbacks while benefiting from the overall upward trend.